The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the SPDR S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So here is the daily chart for the SPY, and last week prices closed at the 390 level. It opened right around the 391 and traded higher. So basically from 1 week prices were at the 390 and now price closed at the 395.75, so about a 5-point gain right there in amount of weeks. So does it look like prices want to go lower or higher? So I'm still leaning towards the downside, and I'll go over the reasons why right now. So prices made this downtrend right here. We had a break of this downtrend and a new low, but then looks like prices corrected higher in the form of two legs. So you can see this was the first leg higher, and then we pulled back a little bit. This was the second leg, came very close to this measurable target before dropping down pretty sharply. So that can tell me that we can make another leg lower. So this is the first leg down. Prices could be in the formation of the second leg right to the 376 level. So that looked like it was going to occur, and it still can, but we need to barely break above this green candle and then drop down immediately. We don't want to see prices continue to rally higher. If it does, then maybe this entire leg up will be met again, or it will make a measure move higher to the 410 level. So I'm expecting this long to fail right here for price to drop down lower, but again, it's just very choppy right now. You can see the macro pattern is a ranging pattern for pretty much about a year now. If we hit May, which is just 2 months away, or even a month away, you know, March is almost over. So if we hit May, mid-May, then you know we've been going sideways for about a year. I'll show you guys that right now. So this looks like the resistance at the 415, support right around the 363 level, and we're just chopping back and forth inside of these two levels. We had a failed breakout on the top, failed breakout on the bottom, and prices are still chopping back and forth. Near the middle of ranges is when it gets choppy. So this looks like it's right at the middle, and you can see that if I put a box on the choppiness, you can see majority of the time it occurs in the middle of the range. So it looks like all these choppiness is near the middle of the range. So this 390 level is just you know, a neutral zone. It's just the bulls and bears going back and forth right here. Usually the strong moves are on the tops and bottoms, just like right over here. So you know, in the middle it's really hard to say where we're gonna go. Since we hit the top, we should be going to the bottom side, and it did look like the longs failed to go higher multiple times, but I don't like seeing this green bar right here occur on Friday. But again, we need to see a lower high take place, which means we need to see a bar break above this, and then immediately get rejected towards the downside. And then it looks pretty good for the shorts. As right now, it's still okay, but I don't like what I'm seeing for the shorts. You know, it looks like we could probably see another leg higher. So the SPY, you know, there's some indecision in the market, a lot of things going on around the world, and even, you know, the United States banks, whatnot. A lot of indecision, a lot of sideways trading. We're just going back and forth up and down through this 390, 395 level. You can see that we shot right through it, went back above it, shot right through it. Maybe we're gonna go back above it, maybe not. We're just not really trending in any particular direction. It was nice and easy back here in 2020. You can see how nicely the market was moving higher, and this is where you want to just pretty much hold on to a position as long as you can. Again, not financial advice, but this is the type of market for a buy and hold strategy. Now, this is not the type of market for a buy and hold strategy. You can see how well, you know, it's not going anywhere. It's just going up and down between two levels. So as right now, it does look like longs could be trapped, but again, since we're just going sideways, that trap might not occur, even though it did look like it's set up to be a long trap. Could be shorts getting trapped. basically it could just be a double trap. Whenever we get to these consolidation areas, the market is just trapping out everybody. It doesn't really care who you are. It might just, sucker you in and then trap you out. So here we have the weekly chart for the SPY. Last week did look kind of bearish. We closed below the EMA, and you can see there was a nice wick to the bar that got rejection. So if we get back below this 388 level, there's a good sign, and we need to break this 380 level. So we need to get below this candle at the 388 level, and then reach the 380 level and break it if we want to see lower prices, because it did act as support 2 times already. So if price to go back there again, that doesn't look good for the bears. If we get a bounce from there, we want to see a strong rejection or strong push through that level. So there is a downward bias to this chart. You can see that we went down into this consolidation area, and normally we will come out as the same way we came back in. So usually we get something like this. Not all the time, but there's a good chance that occurs. So we'll see if that can occur. But as right now, prices are just going sideways. You can see how the EMA was pointing up in 2020, pointing down in about 2022 for the majority of the time. Now it looks like 2023 has already started to be end of 2022, and the 2023 has been kind of like sideways. So it's a very choppy market, a lot of indecision. Traders are really not sure about the future of the SPY. So we're seeing consolidation occur at a key level, and I'm expecting lower prices. But again, the trap should have occurred. I'm giving it to the 388. If that doesn't occur, then again we could probably see a retest of the swing highs right around the 410 level. So I'm expecting lower prices, but again, since it's so choppy, it's really hard to be confident in any particular direction. This is pretty much the time just to sit out and wait for something more clear. So that's all I have for the SPY this week, Sunday, and I give you guys an update next week, Sunday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.